Hi there, welcome to Kneppyinvests and welcome to a pretty green day on the markets. The Irish will be happy because don't they love green? I have no idea. Anyway, so pretty good day on the markets today. Everything's up, particularly tech and mining, small caps as well. This was led by the American markets. They had a pretty good rally overnight as well. In fact, my superhero American account was up by 4%. That was a nice, pleasant surprise. That was helped by United Armour, I believe, was up about 20%. Eli Lilly was up about 10%. So a really good rally on the American markets overnight. I'll talk about why they rallied. And I also will push back on people who believe the reason the markets dipped over the past week or so is because of the Japanese yen carry, or whatever they call that. I don't absolutely think that was the reason why the markets dipped. I think it was a little bit more nefarious than what happened in Japan. And I'll talk about that in maybe a minute or so. So, what is the agenda for today's video? It's going to be very similar than other videos I've done in the ASX Daily Rundown series. I'll look at no tweets. I did send out a few tweets this morning. No tweets, but I will have a look at the ASX today, including the best and worst performing indices, sectors, and also companies. I'm sure we're going to see quite a few companies on that list. Also, we're in reporting season, and today is big time. We've hit big time today. And when I say big time, yesterday we had a few boring companies release their financial results. Today we have seen some interesting companies release their results, including REA Group, Scali. We also saw Life360 release some results, and I got that completely wrong, and QBE, which is another boring stock. So I'll have a look at some of those companies' results. They did make it in, or some of those companies did make it into the top 5 stocks of the day. Few other companies made it into that list as well who do not release results. One company did not release results. Have a look at that company as well. Also mention a few other companies that have come onto my radar because of some of the announcements they have released today. Then I might have a look at some charts and have a look at a few of your comments. Okay, so let's get into the ASX today. What happened overnight? So the first thing I always do when I wake up, apart from actually playing Wordle, I always actually do Wordle first, because if I don't do Wordle straight away, I forget to do it later in the day. So that's just a habit I've developed. Second thing I do is actually look at what happened on the American markets overnight. And this is my US portfolio. Only one company down, which is Volkswagen, which is not exactly USA. That's actually listed in Germany. Novo Nordisk could be dual listed, but I have that on is it Dutch or the Denmark exchange. Anyway, my other portfolio, US Tech Holdings, yeah, really good day. Yeah, United Armour up 19%, Eli Lilly up 9.5%, Coupang up 7.4%, and Micron up 6.1%. But the reason why the USA markets rallied, they were up, Nasdaq up 3.1%. If you don't really know, all you have to do is just go down here. Oh, they don't have it. Why don't they have it? This is sort of annoying when they don't have it. They did have it. It was to do with unemployment, something to do with the labour market. I forget exactly what, but usually they do have it down here. They have little links to what happened overnight and what might have led to the markets up or down. So what all you have to do is just all you have to do. Sorry, I got a little bit tongue tied there. Nasdaq rally Y, and let's have a look at. Here it is. Is this it? Yep. The rally in the US stock market comes after the latest jobs data increased investors' confidence in the economy, calming fears of a US recession. Initial claims for state unemployment benefits fell 17,000 to a seasonally adjusted 233,000. So that was slightly lower than expected. In fact, it says the largest drop in about 11 months. So there is less fear out there. Now, what is interesting is the reason why we had this dip in the first place. So we have heard a lot of people try to explain this. In fact, the Baby Giants podcast said, well, the whole reason we had the dip was because of the Japan or the yen carry trade. Here it is, carry trade. The yen carry trade. You get a lot of these articles written about it. I actually don't think it was the yen carry trade. I don't think the reason we dipped wasn't because of this. It was because of the weak economic data from the United States at the end of last week. That was a catalyst. This was just something that happened alongside alongside that bad economic news in the United States. So today we've seen better economic news, hence the rally in equity markets around the world. Yeah, definitely will push back on people who say the reason why the equity markets around the world dropped in the past week was because of the yen carry trade. If you don't understand this, what this means, there's probably a few videos out there. It's just because interest rates in Japan, the simplest way I could explain it, interest rates in Japan are really low. So what you do is you borrow your money in yen and then you buy other assets around the world that have higher yields. And so there's sort of like an arbitrage. And because the interest rates had risen, everyone panicked. Well, maybe not everyone, but that particular carry-on trade or carry trade had less appeal. And that's a simple explanation I could come up with for you. Anyway, so that's why the markets have rallied. But just one good piece of economic data does not mean the risk of recession has decreased significantly for me to go back to being excited or being bullish. You can just see that by the overall market. Let's have a look at the why is there it is. I was going to say, why is my mouse not working? But there it is. So if you go to the NASDAQ, well, that's weekly data. If you go to the NASDAQ, it's still looking a bit dicey. And even when we do see bear markets, you will see really good days within the bear market. And people might get too excited during those really good days. So the question I do have is whether this is a situation or a time to think about unwinding some of your positions. I'm not sure if I'm there just yet. I have unwound some of my positions during the week, so I do have a nice cash balance. However, I have bought a few positions today. Looking at you, AMP, I do still feel a little bit dirty about buying some AMP, but it's such a trade. Also bought some Civmac because Civmac's share price had dipped. So actually, I'll show you the charts of those companies later in the video if I remember why I bought. Okay. So that's why the Australian market is up today, because some good, better than expected economic news in America. Nothing to do with the yen carry trade. Nothing at all to do with that. And I still will push back if people want to argue the whole reason we dipped was because of that. Anyway, so pretty good day on the markets. I would say defensive stocks, defensive sectors, the worst day today. But even those are up. Yes, utilities up 0.6%, staples 0.6%, and discretionary 0.5%, although discretionary is not defensive. In fact, you might be able to argue that's the complete opposite of defensive. But IT up 3.6%, real estate, good, telecommunications, good. I had been thinking about taking profits with some of my longer term holds. I'm glad I didn't do that. So I was going to take profits with WiseTech, Goodman Group, and I'm just glad. And Aristocrat, some other companies as well. The ASX 20 only up 0.98%, which is probably understandable. You have more mature companies, lower growth companies in that. I would be shocked if any companies are down. I would say maybe one or two are down, 18 up. Let's have a look. One down. So which is the only ASX 20 company down today? I have no idea. What was the worst performing? What was the worst performing? I've already forgotten. What was the worst performing sector? Discretionary. Staples. Maybe it's Woolworths. Let's have a look. I have no idea. I'm just guessing at this point. QBE, of course. QBE. Okay, that's stupid. I should have known that. Okay, it's QBE because they did release their results today, and the results actually did disappoint the market. I should have known that, yeah. It's not surprising that QBE is the worst performing company. Wesfarmers, meh. Commonwealth Bank, meh. You're probably disappointed if you got a big holding in that company. Well, maybe not if you've held it for a long time. And the best performing companies today, REA Group released the results. That company made it into my top 5, up 6.76%. WiseTech had a nice rally. Rio Tinto, Goodman Group, Woodside. No surprises there at all among that list. Okay, so let's have a look at the best and worst performing companies. The sort of day where you don't want to see your companies among the top losers. Anyway, let's have a look at the top gainers by percentage change. We can completely ignore Oliver's Real Food. We can probably ignore Renogen, even ignoring Ben's Mining, Battery Age Minerals, Metal Bank, Infinity Mineral. on mining because most of those companies are fairly small, and more than likely, none of those companies release anything. I'm just going to verify that Renogen didn't release anything today because the turnover there is a little bit higher, but maybe they always have good. No, they did release an announcement today. A liquid helium production online. Okay. So does this mean they're going to start to get some revenue? Interesting. So Renogen, RLT. Let's have a look at the chart for Renogen, a company I don't know much about. Share price has been a downtrend. Is this a breakout? Pretty good volume coming in. This could be an exciting time for Renogen. This could be a potential breakout. Now, the share price is at about a 2-month high. So not getting to my 3-month high, preferably 6-month high, preferably 1-year high. So I wouldn't necessarily say this is a breakout at this point in time, but definitely one to put on your watch list. A nice looking 1-day counterstick, but we still have 1 hour and 20 minutes left of trading, so it might not stay there. But anyway, there he goes. Announcement I did not realize happened today. Renogen. That's the whole reason I go through this process, to see if I've missed any announcements. EVZ did release a price-sensitive announcement. I did have my list. Did not make it in my top 5. It was just about a contract, but the markets liked it, up 19.36%. So let's talk about EVZ for a very brief period. So they did release, well, something to do, major contract win. I'm not the biggest fan. Well, that's not the right way to say it. I do like contract wins, but it's not the sort of announcement that would trigger me to take a position. I prefer a good financial news, like profit upgrades, releasing results, and they beat expectations, and then pretty good outlooks. This is just a major contract win. There's a number attached to it, but what's the margins? So we just don't know the margins. This company is operating cash flow positive, profitable, fairly small company. It is sort of like in the mining services realm, engineering services realm. Market cap of this company is only $22.4 million. Let's have a look at the chart for EVZ. Is this a breakout? So again, if it looks like a breakout, I might get a little bit more excited. And the answer to that is no. In fact, the share price at one point today got as high as 22 cents, which was the high, exactly the high this company saw back in February. Yeah, so this chart is the reason why I would not be excited about EVZ. It is updating. I thought it wasn't updating. EVZ Limited. If you look at the weekly chart, it's not updating. You lied. You lied. There it is. There's a weekly chart for EVZ. And share price has been going sideways for about 3 to 4 years. So at this point in time, not excited. Still waiting for some sign. Although the one thing I might get excited is you do see a subtle increase in volume in 2024. That could be a good sign. So I might put this company just on my watch list, but I'm not interested in it just yet. I'll put it into that watch list there. So that's EVZ up 19.3%. Elsewhere, or down the bottom there, Life360, and have a guess which company is in number 1 in my top 5 stocks of the day. Life360 released their quarterly results, I believe, share price up 17%, and I got that completely wrong. I saw their announcement, saw their results, and I thought the share price would go the other way. It didn't, but the opposite way. And I'm not upset by that because I am trading Life360. So the share price went down 17% today. I probably would have sold, but it's up 17%. And the question I have to ask myself, well, should I add to my position? I'm already up 50% in that trade. And this is the sort of announcement that I would, if I wasn't holding Life360, I would think about taking an initial position. So question I have to ask myself is, will I add to that position? Now, in saying that, the valuation of this company looks quite rich. Markup is almost $4 billion. But the potential of this company is pretty extreme, pretty high. And we'll have a look at their potential future in their presentation. So one of the reasons why the share price might be rallying is because they've laid out their plans or their potential plans in the future to grow. And it is slightly exciting. Even though I'm just trading it, I'm not a long-term shareholder of that. And if I do see the company under a bit of pressure or stress, I will sell out of that position. Now let's have a look by market cap. So Life360 is there. So that company is number one. Now, News Corporation, they own a fair bit of REA Group. So what I've done is I've combined REA Group and News Corp, and their ticker code is NWS, National Weather Service. Yes, National Weather Service. I always go to this website. NWS is not News Corp, it's National Weather Service. And I lived, for those who don't know, I lived in the United States for 8 years, so I'm well accustomed to looking at the National Weather Service. Even when I'm not living there, I look at it because the weather in the United States is much more interesting than here. Other companies' share price up today. A few of these. GenusPlus up 7.3%. I'm very happy that company is on this list because I put that company at number 3 on my top 5 stocks of the day. They did release an announcement, and you can see why I took a position in this company just because of this announcement. So I'll talk about that later. Otherwise, Civmac is there. So I bought some Civmac shares because the share price had dipped. So have a look at the chart for Civmac. So I'm very happy that's there as well. So you can see I haven't looked at this. I haven't looked at this. Avita Medical up 9.6%. Oh, it's in number 4 in my top 5 stocks of the day. They released their quarter results as well. So the market has liked those results. So congratulations to Avita Medical. Other companies here, some of these companies might have released something interesting, but who knows, because the market's had a really good day. Now on to the top losers. So this is when you don't want to see a company that you own in your portfolio. I'm pretty sure Pharmex did release something today. Now, it might be a couple raising. Let's have a look. Pharmex. Update on Fred appeals in legal proceedings. I have no idea what this company does, but the very fact that there's some legal proceedings, stay away. I would say also the chart probably looks pretty weak. Let's have a look-see at Pharmex. This company has not been popping up on my radar at all, and this is probably why. That's the weekly chart. In fact, the daily chart, well, the daily chart looks pretty bad. And I'm pretty sure ActivePort also, maybe not also, because Pharmex didn't do a capital raising, but ActivePort, I'm pretty sure that company did a capital raising. Let me just confirm. Yep, completion of share placement today. So we can move on. Don't really want to touch upon that particular company. It's fairly small at a market cap of 15.6. Otherwise, no big companies here. In fact, most of these companies are falling on fairly low turnover, and these companies are fairly small, like Imogen Biosystems, market cap of 1.1 million, turnover of $1,700. So I'm looking for another big company here. They're all small. They're all small, aren't they? So the bad performing companies today are small. So let's have a look by market cap. So we might get some, Neuron Pharmaceuticals. Did not make it in my top 5 stocks, down 5.9%. Pretty sure I talked about that company recently. And I should mention Neuron Pharmaceuticals right now. I liked what they did, the management did here. It's a little bit of a sneaky thing they did. They released they released a second quarter 2024 update on the 7th of August. It was weak. It was negative. It was pretty bad. But at the same time, they went into a training halt because they wanted to reveal the phase 2 results of Angelman, and the results were pretty good. I think if they didn't release these phase 2 trial results, the share price would be down by 15 to 20% because that's how bad the second quarter update was. Some people might push back on that, but I do think the market was concerned about that. But this good results for this phase 2 trial, I think, this is just my opinion, I think has led to the share price not decreasing as much. Now, in saying all that, if I was trading this, I would be out because the chart does look much weaker. So I would be out of this company if I was trading it, but I'm not trading it, so that's not relevant for me. Nice little rally in the share price today. So share price has risen today. So we have seen a bit of buying coming in. Share price got as low as below 15. Now it's above 16. Okay, so that's Neuron Pharmaceuticals. Probably not surprised it's there. And some of these other companies are fairly small. Well, 3P Learning's not small, but low turnover. Pacific Smiles has been going through a takeover frenzy recently. I've just been seeing announcement after announcement of takeover from that. And then B-Bus, the Strong Bear, not surprising that's down 6%. Wagner's, is now time to think about buying Wagner's. Shine Justice, Adore Beauty. Most of the companies are down on fairly low turnover. Anything else here? No, 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 no. The short Nasdaq, Sanas, is down as well. Okay, so let's get to the top 5 stocks of the day. I'll briefly mention a few other companies did not make it. QBE released their results, did not make it in my top 5. Share price down a little bit, and I believe, in my opinion, no, actually, it's not my opinion. I did see a tweet about it. The results were worse than expected, slightly worse than expected. I had a very quick look at their results, and I went, "Oh, they look okay." I'm not the biggest fan of insurance companies. I think so many things can go wrong. In this sort of environment, they do fairly well because with their premiums, they get nice returns from their premiums because interest rates are high. So in an interest rate dropping environment, these insurance companies probably won't do as well. But anyway, profit was up by 50%, no 100%. Net profit after income tax 802 million. Last year it was 400 million. Pretty sure this is half year results. Yes, half year results. Is it half year results? Yeah, half year. Yeah, and yeah, so but the main thing is the results were not better than expected. And there is a possibility, I haven't had a look at it. There is a possibility that outlook might be a little bit weak. Let me just confirm that. I'm hoping they mention it in the media release. Uh, let's have a look. Any sort of outlook here? Here we go. So this full year 2024 outlook might have been a little bit weaker than expected. So a growth of 3%, gross written premiums growth of 3%, combined operating ratio 93.5%, investment returns. A lot of that doesn't make sense to me. And again, that's probably the reason why I'm not the biggest fan of these type of companies. If you actually go to Twitter, I'm just going to see if I can find. I can't remember who tweeted QBE. So let's have a look. Was it Rudy? Could have been Rudy. Oh, yeah. It was Rudy, yeah. So small earnings miss and financial year 24 guidance pulled back modestly. That's probably why the share price is down. NPAT insurance profit both down 2% behind consensus. This is not his thinking. This is UBS. So that's probably why the share price of QBE is down today. If you have a look at the chart was looking pretty good. There could have been, oh no, not anymore. Chart was looking pretty good over the long term, but it's starting to look weak. It has pulled back a fair bit from a high of 18.50 now down to $15.91. So that's QBE. Did not make it in my top 5 just because the share price had not dropped a lot. We've already talked about New and Pharmaceuticals, EVZ. Company called Hazer. They did release something that was slightly intriguing. Don't know much about this company, but it has popped up on Ausbiz Core a few times, and there was an analysis or an expert who was pretty high on this company. So 240 hours of continuous operation achieved at CDP. I just look at that announcement and go, so this company might be generating revenue soon. I don't know. Don't know anything about this company. Couldn't even tell you what they do. If you don't know what a company does, and I'll do this all the time, just go to the About section. Australian technology company tells me absolutely nothing. I need a little bit more information than that, Hazer. Driving global decarbonisation efforts with the commercialization of the company's disruptive, world-leading climate tech. What is it? Advanced technology enables the production of clean and economically competitive hydrogen and high-quality graphite using a natural gas or biogas feedstock and iron ore as a process. Careless. Sounds pretty exciting, but just because it sounds exciting doesn't mean it's feasible. Doesn't mean there's a business model here. Doesn't mean they can generate profit and revenue. The company confirms that a major progress milestone in the performance test program has been achieved with over 240 hours of continuous stable operation. So it's 10 days. 10 days of continuous operation. So without me knowing much about this company, and the only thing I know about this company is the About section we just read, it's nothing. The only thing I know about this company is the share price or the chart looked really weak the last time I looked at it. And yeah, that looks pretty weak to me. And a little bounce today, but does not get me excited at all. And I can't forget Pointerra. Wish I could have included this company into the top stocks of the day. Up 10%. Now, this was another contract. That's the main reason. It's just a contract. Fairly small contract, albeit, but contracts matter. sort of like putting a frog into boiling water or turning the heat up. They all matter. I think that's a really bad analogy. Anyway, yeah, USNE, so what is it? $1.23 million Australian dollars in new contracts. So it's not a lot, but for this company, it's something. And I actually did tweet this, and I just mentioned that the chart is starting to look interesting. I'm not there yet, but it's starting to look interesting. So progress is being made for Pointerra. Okay, so let's have a look at the top 5 stocks of the day. We'll start off with Scali. And so most of these companies did release results today, except one. Scali, share price down. Ooh, I thought the share price might be down a fair bit. So we didn't see it in the worst losing or the worst performing companies. Share price did open at $13.81, which was the low of the day. So if you panicked on open this morning, you saw it at the low of the day. Again, this is another example of me of the reasons why I would never try to sell or buy on open. Because sometimes you just don't know which way the market's going to go. And that's definitely true for Life360. But let's have a look. We'll have a look at the media results. So everything's down. Revenue's down 7.8%. Underlying profits down 18.8%. What else here? That's underlying results. Even if you look at statutory results, everything is down, including dividends. They also talked about a fair bit of weakness in UK. So remember they bought something in UK. Hoping it's somewhere here. I did read it somewhere. Here it is. Oh, Outlook. So, in fact, the outlook for the UK was weak as well. And so far, the trading conditions in Australia are weak. Although they do mention that so far, July was disadvantaged by one less weekend. Yes, that does matter. So July only had 4 weekends or something. June 2024 had 5 weekends, but down. So written sales order growth for June and July combined was 1.2% lower compared to the prior year. They do plan to open some stores, but UK was weak. Written sales orders are down, affected by a combination of tougher market conditions, longer lead times due to supply chain disruptions, and commencements of store refurbishments. Trading is expected to deteriorate further in the first half of financial year 25 for a few reasons, due to store refurbishments and change in the product range. So I did expect a fair bit of weakness in Scali's share price this morning, and it did open lower. And let's have a look at the chart. So I'm a shareholder of this company, by the way. So I bought some shares many years ago and went, I'm not going to sell shares in this company. I don't care. I'm not going to trade it. I'm just going to hold it for the long term. The reason why behind that is if you look at the weekly chart, this is a chart of a high quality company. You notice there's a fair bit of volatility over the last few years. This is because of COVID-19, a little bit of tailwinds, a little bit of headwinds, that sort of thing. But at this point in time, I would expect the share price of this company to be much higher than it is now in 10 years' time if it has been taken out. Or maybe if the founder, is it Scali? Or maybe it's his father. Maybe they leave the business. Don't know. But the only concern would be expanding overseas and expansion dreams, particularly when they're overseas, sometimes are fraught with danger, difficulties, fraught with going badly. So there is that possibility. Let's have a look at the chart for today for Scali. I just want to see, share price has rallied pretty significantly. In fact, if you go to the 1 minute chart, you're going to see, I just want to see what the share price opened up. But so in the first minute, share price was only down 4%. Share price opened at 13.81. So it closed yesterday at 14.58. In fact, I can see that here. Closed at 14.82. So share price was down $1. So what's $1 over 14? So we're talking about 14, so 8. No, yeah, 7, 8. We'll say it's about a 7.5% decrease on open. I'm just going to see how good my maths is in my head. I'm going to say about 7.5. So 1 divided by 1 divided by 14.8. I was 1% off, 6.8%. Sound a little bit more than that. Okay. But still, the share price of Nick Scali has rallied by about 6%, maybe even 7.5% during today's trading. So this is another reason why sometimes you just don't sell on open, because you just don't know which way the market's going to go. The market sometimes gets it completely wrong. And this is an instance where the market's got it completely wrong. It's not as bad as what the market initially thought. And you can just see that with the share price rallying today. Almost instantly, the share price rallied. In fact, by 10:39, 39 minutes after the market opened, the share price had got back up to $14.75. And since then, share price has gone sideways. So the rally happened in that 39 minutes of trading. So that's next Scali. Coming in number 5. Coming in number 4, we have Avita Medical. They did release their quarter results today. Share price up 8%. It was actually pretty good. Pretty good. Nice growth. I had a very quick look at these results. I'm going to show you something, and this gets me really excited. Whenever we're in this time of year, when I see this, you can see QBE Insurance, 4 announcements. Nick Scali, 3 announcements. News Corp, 3 announcements. REA Group, there was a few announcements there. When I see that, I just know we're in August. You're getting these companies to release their results, and they release about 4 market-sensitive announcements in a row. REA Group didn't do that, but QBE did it. Nick Scali did it, News Corporation. And whenever I see that, open up, come to the computer, open up the ComSec announcement page, and it just gives me a nice warm feeling. And that's exactly what happened this morning, particularly when I saw Nick Scali, News Corporation, and because there's a link between News Corporation and REA Group, I knew REA Group was going to release the results, and immediately released the results. And then I saw Pointerra, I went, oh, Pointerra. And then I saw GenusPlus, I went, oh, GenusPlus. Then I saw Avita Medical, I went, oh, Avita Medical. Then I saw Life360, I went, oh, Life360. So a continuous, and that all happened in about, 30 minutes. But from Nick Scali to Life360, all in 20 minutes, from 8 to 8:19. Pretty sure after Life360, there wasn't anything after that. So it all happened in a very short period of time. Anyway, I'm going on a tangent here. So Avita Medical has been beset by lots of volatility. On occasion, the company disappoints the market. On occasion, the market is excited by what Avita Medical releases. And this is one of those instances where the market likes it. Now, this company is not profitable, but they are increasing their revenue. So this is their second quarter results. So it's not full-year results, not half-year results. It's quarter results. And they also release guidance. But the company is not profitable. Actually, I did not have a look at the actual results, the financial statements. So what I'm going to do later today is I didn't go through these results of all these companies in fine detail really quickly, and then later in the day I'll go through them with a comb, fine comb. Anyway, so this is actually, and I have not had a look at this yet. So revenue up 18%. Net loss up 74%, so to $34 million. Oh, is this the 4-year results? $26 million. Let's have a look. Yeah, okay. No, that's this. So they're expecting revenue in the third quarter of 19 to 20 million. So this is just 1 quarter results or something. Seems like it's a little bit high based off their expected revenue. So is this half-year results? I have no idea. Quarter results. Yeah, it's quarter results. It's got quarter results there. And this is American standardized. So let's have a look. So 2 things I'll have a look at here. And so for some reason, Americans always put the balance sheet first, then the profit loss statement, and the cash flow statement. And the cash flow statement is a little bit different than the Americans. So the balance sheet is fine. I don't really need to look at it for this company. All I'm interested in is the profit loss statement. This is in American dollars as well. And so they are lost. So fairly big loss. So the loss was almost equal to their revenue. So this company is still burning through, well, not burning, it's still losing a lot of money. And another thing I'd look at is the cash flow statement, which hopefully is just there. There it is. So in the Americanized cash flow statement, they start off with at the cash flow from operating activities. In the Australian version, you start off with cash receipts. So a little bit different. And then in the American version, they work their way backwards. No, actually, sorry. In the American version, they start off with the loss. So loss or profit. So in this, and then they work their way backwards to get to the operating cash flow. So got that completely mixed up. Anyway, so they start off with a loss, and how do they get from a loss of 34 million to operating cash flow of negative 33 million? It's more interesting when there's a big difference between the profit and loss and the operating cash flows, just to see how they got that. And usually it's changes in working capital, that sort of thing. For a lot of American companies, it's stock-based compensation, which I don't think there would be much in that of here. In fact, $6.6 million, I'm presuming that's million, $6.6 million in stock-based compensation. I hate stock-based compensation, but that's the biggest change here. Everything else is quite small, so there's not much difference between the loss and the operating cash flow. And this company was operating cash flow negative by 33.6 million. So I still don't have interest in this company just yet because they're still burning through so much cash. But nice increase in revenue. If you look at the financial guidance, revenue is expected to increase between 40 and 48% to 90 to 20 million. For the full year, revenue expected to be between 68 and 70 million. So nice increase from last year. And they expect to achieve previously given guidance of cash flow break even and GAAP profitability no later than the end of third quarter financial year 2025, or is that calendar year? It's probably their calendar year is the same as a financial year. Anyway, so I'm not sure if they can or will achieve that. So you do need a little bit of faith in the management. If you don't know what GAAP is, there's non-GAAP and there's GAAP. I'm pretty sure GAAP is the approved, well, I could be completely mistaken. I'm pretty sure GAAP is the approved accounting standards. There we go, or principles. Generally accepted accounting principles. And the non-GAAP is not generally accepted accounting principles. Yeah. Standards. Why would it be standards? Generally accepted accounting standards. Then you could call it GAS. Anyway, so that's Avita Medical. And the only reason it made it in the top 5 was the share price was up 8%. And let's have a look at the chart for Avita Medical. Is this a breakout for the company? Avita Medical. Well, we got to change it to the daily chart. And you just see that by this. This is a daily chart for Avita Medical going back to February 2023. All over the place. Up and down like a yo-yo. Share price has been as high as 620 and as low as 240 within the last year and a half. And right now, the share price is nearer the low than the high. So it's probably a little bit more negative sentiment in this company than there has been in the past, particularly in 2023. So it's Avita Medical. And one of the reasons why I'm not that interested in the company just yet is they are still burning through a lot of cash, even though they do say by the end of 2025, they might be cash flow positive and that sort of thing. Coming in number 3, we have GenusPlus. No complaints about the chart for this company. Share price up 5. It was up a little bit more. Genus PFA contracts update. So as I've mentioned, I'm not the biggest fan. No, I said erase that. I don't mind contract wins, but they're not the sort of thing that would trigger me to take a position or a trading position in the company. Now, I am a holder of GenusPlus. There's a few reasons behind it. The main reason is because we need to significantly upgrade our infrastructure, particularly our energy infrastructure in this country. And that's probably true for many Western countries. Significantly have to upgrade our infrastructure. And that's where GenusPlus is or comes into play. Anyway, so they have won a few contracts. Not only one, but extended a few contracts, including some contracts they really, really wanted. And they sort of mentioned that. So national, just look at this little paragraph here. National Essential Power and Communications Infrastructure Provider, GenusPlus. That's itself is why I'm a shareholder of this company. And more than likely, I'm going to hold on to these shares for a while yet. Okay, so the acquisition of Pole Foundation Australia was highly strategic for Genus. It was an acquisition they made. The business significantly expands our capability into highly specialized service for tier 1 customers, allowing Genus to provide a full life cycle service across pole inspection, reinforcement, and placement. So they have won a few contracts. Energy Queensland for network asset inspections. So it's Energy Queensland. 4-year extension, award of a new 5-year Urgent Energy Southern 1 inspection contract. And these awards are fairly significant in terms of annual income or of revenue. So 6.5 million for the first one, 10 million for the second one, and for the third one, they're $7.5 million per year. So that's the whole reason why I am excited about this particular company, and this sort of announcement won't lead me to buying more shares in this company, but it just reinforces, and that's the most important thing. It just reinforces why I'm a shareholder of this company. These sort of announcements. Anyway, so let's have a look at the chart and why I think this is. This is. I was trading GenusPlus way back here. It broke out in June 1 year ago, just over 1 year ago. It broke out. So I was trading it. And then I went, no, it's too illiquid. And then I thought I'll sell out because it's too illiquid. And then I looked at it again and went, no, this is more of a long-term play. And then what we have seen, the share price or the shares in this company were illiquidly traded in 2023. Liquidity has significantly improved. So you can't really say this company is illiquidly traded. So what I mean, so 215 shares traded today, which you might think it's not a lot, but it's a fair bit. And if you go back through history, there were times last year where there wasn't much trading in this company. There's one day here, 438 shares traded. You're not seeing that now. So the liquidity in this company has really improved. That's the benefits or the potential benefits of buying illiquidly traded companies. If the company becomes more well-known, if the company improves their financials, if the company has some really significant tailwinds behind it, the liquidity is going to improve on itself. That's what's happened to GenusPlus in the past year. So I'm really happy I took a position, $1.39. There it is. That's when I realized, I went, oh, no, I don't want to trade this. I should buy some shares though. And you can just see the increase in volume. That's the other thing. Just look at the increase in volume. And the chart looks pretty good. And the share price today at an all-time high. Pretty sure it's an all-time high. This company listed back in 2020, and just look at the chart. So there is significant tailwinds behind this company. And this is definitely one of those companies where I want to own for a while because of the tailwinds, the long-term tailwinds behind this company. And I am liking the management. I think they're doing a really good job. So that's GenusPlus. The other thing I should mention is I don't want to sell this company. Do your own research. I like it. It's good for me. But do your own research. I don't want to be the sort of person who tells you to buy something. You should not ever listen to what I have to say and buy or sell based off that. Do your own research. Does this company suit you and your portfolio? Do you believe in the tailwinds? Maybe you don't. So do your own research on GenusPlus. So just because I'm excited doesn't mean you have to be. So hopefully I get that across. I don't want to give recommendations out. It's not the whole reason I do this channel. It's just to spread or give you ideas, to share ideas with you. All right, REA Group, up 6.6%. National Weather Service or News Corp, up 6.8%. So share price of both companies up about the same. I'm just going to focus on REA Group because one of the reasons why News Corp might be an interesting investment is because they have significant holding in REA Group. What's significant is that? I don't know. Let's have a look. Probably could find this via their results because there should be some sort of. So let's have a look. REA Group. And in ticker, this is ticker. If you go to ownership, here's News Corp at the top. News Corp owns 61.4% of REA Group. This is a pretty significant holding. So a way to hold some REA Group, or just REA Group, is to buy News Corp shares. Yeah, that's a way to play it. Anyway, let's have a look at the results for REA Group. And I'm not going to look at News Corp because in my opinion, News Corp is just REA Group. That's just my opinion. Now, one of the things, which one should I open up? I'm going to look at the financial year. I'm going to look at their media release. So this company is richly valued. It's richly valued. Yeah, it's richly valued. It has a market cap or no, it probably has a P ratio. I'm assuming at about 100. Let me just verify that. In fact, we can do that. Oh, you know what it is. Okay, we can actually do that. Earnings per share of $3.49. So that's a full year. So 349, and the share price of REA Group is 200. So 200 divided by 349. So price to earnings, price 201.95 divided by, what was the earnings again? Earnings per share 349. $3.49. What happened to my calculator? $3 divided by 3.49. P/E ratio of this company is 60.44. So I thought it might be greater than 100. Maybe that's based off last year's earnings per share. But let's have a look at the growth in this company. Beautiful growth. So Australian revenue up 22%. And actually, that did fill me with nice feelings. One of the reasons I'm a little bit more bullish on REA Group is because of India. So India revenue up 31%. Now their India operations are not profitable. That's okay because they don't need that to be profitable. I want that particular part of the business to grow significantly. So the revenue in India grew from 79 million to 103 million, but not profitable just yet. In fact, India EBITDA negative 36 million, but that's again okay. So the group operating expenses up 18%, revenue up 23%, which means revenue grew at a greater rate than operating expenses. Margins expanded. That's great. Group EBITDA up 27%, margins expansion, and net profit attributable to owners of parent up 24%. Really nice growth from REA Group. And I assume, just based off the share price performance, that the results either beat expectations or the outlook was good. I have not had a look at the outlook. Let's have a look to see if they do have anything here. They might not even, yeah, they do have an outlook. Sometimes a company won't release an outlook when they release their full year results because the new year, financial year, is still too young. But when you get to the AGM, that's when you should see companies really focus on the outlook. And this is still some good growth here. Looking at this very quickly, yeah. EBITDA losses in India are anticipated to be lower in financial year 25 compared to financial year 24. That's good. Positive operating jaws is targeted in financial year 25 with high single-digit group core operating cost growth anticipated. So things are still moving in the right direction for REA Group, but it's expensive. Now, funny enough, I did a video on a REA Group. REA Group. I don't know when it was. Here it is. Why I sold REA Group in February 2021. Yes, I sold REA. This was my longest holding. I had a holding in this company for many, many years. Then I sold in February 2021. So let's have a look at the chart where I sold. I'm going to give myself a bit of a rap here. February 2021. So I sold at about, it was over $150. It was about $155. Share price did get $280, but I sold here. And I bought back in at about it was $105. Yeah, so I thought REA Group was really expensive back in February 2021. Now, that's 3 years ago. Share price is now higher. Do I think REA Group is expensive? Yes, but I'm not going to sell. And yeah, this is an instance where I've decided, yeah, I don't want to sell this company. But this was just, yeah, I had no intentions of buying back in, but I just thought, oh, it looks the valuation back in like a year after I sold looked much better. I went, oh, this looks much more attractive now. Anyway, and I did that with a lot of American companies as well. I bought, back in late 2020, middle and late 2022 when valuations look good. Valuation matters, and I did that with REA Group. Will I sell now? No, not quite there. No, not there with REA Group. Anyway, and in fact, what I'm going to do, and what I might do now, is we'll go to FinChat. I'm just going to see what so the P ratio now 64. I'm just going to see what the P ratio was back in 2021 when I sold. So I want to see if if it is cheaper. So February 2021, the P ratio was, oh, it was 147. Oh yeah, I can definitely see why. Yeah, it was about 150. Okay, I can definitely see why I was thinking, oh, this is way too rich, and now it's below, it's at 60 now. So yeah, I can definitely, I can understand what I did back in 2021. A P ratio of 150 for this company is a little bit too high, and I completely sold. That was a good move. Would I do it now? I might sell half. That's what I might do now. So different strategies. So we do learn as investors. Back then, I just would sell everything without even thinking about holding a parcel or taking profits or selling half. I'd probably more than likely sell half, not completely sell out, even if I think the company is significantly overvalued. Okay, and that's REA Group coming in at number 2. And I'm not going to do any of your comments, so I'm going to have to wait till tomorrow because 50 minutes into this video. Life360, I got this completely wrong. I had a look at their results and I went, oh, I think the share price is going to fall. The share price up 17.7% today. Yes, so I got this completely wrong. What should we look at? Now, I'm going to open up the presentation as well. I did have a look at the presentation of this company because I was trying to understand why the share price was rallying. I was like, oh. Now, yeah, so I can't remember exactly what I was looking at to think, oh, it's not as good. Let me just try to remember. Oh, gross margins down. Gross margins down from 77% to 75%. Gross profits up, but that's because everything else is risen. So gross margins down, and I'm pretty sure the cash flow was like steady or not up from last year as well. Yeah, cash flow. Last year was $3.7 million. This year, this is just the quarter results, by the way, 3.3 million. If you look at the 6 months, pretty good. So I was just thinking, when I looked at these 3 months, gross margins down, net cash from operations down as well. I'm pretty sure there was also some commentary talking about that as well. And I was just thinking, where was it? I'm probably definitely not going to find it. But it was just, they were just hinting at some weaker, something. But I can't remember what that weakness was in. And so my thirst for, actually it could be this bit here, gross margins. Gross margins decreased to 75% from 77%, driven by lower subscription and hardware gross margins due to favorable impact to gross margins in the second quarter. Okay, so not as negative as I thought because there was a favorable impact to gross margin in the second quarter of 2023. So I just saw some weakness here in some of the numbers, lower gross margins, that sort of thing. And I thought, oh, I think the market might sell off this morning. And no, I was wrong. Share price up 17.7%. So then I thought, well, why is the share price higher? So then I had a look at the presentation and I went, oh, there's some really interesting things in this presentation. Now, I'm going to have to admit, now I am trading this company and I have heard Life360 mentioned. So I do watch videos or non-investing videos. So I do like crime videos. And this was mentioned in a crime video. Oh, we do have Life360 and we're not sure what she did with the Life360 on her phone or something. And as soon as I heard that on this crime video that was set in America, I went, ooh, when you start hearing more and more of a product or a company without any selling, so there's no marketing reason for this to be mentioned, that's when you know there's some substance to the company. And that's where Life360 is now. Now, some detractors of Life360 would say, well, why can't Apple just put this on their phone? I think Life360 is past that. So there was a few things in here that I actually did like, particularly about the future. I think it was this one here. Significant opportunity to continue to expand total addressable market. So right now, subscription services. Then pet tracking, item tracking, 2021, 2022. But today, advertising. So this company is expanding their offerings and advertising 3.1 billion. I was thinking that could be underselling the potential for advertising. Not only that, auto insurance, elderly monitoring, family financial insurance or services. So just simple stuff like if your car breaks down, Life360 can send a repair guy, what do you call it, the tow truck to you, that sort of thing. So that pet tracking and item tracking was a few years ago, but they are expanding their offerings. They're they've got this ambition. I like that, really like that. So that could be one of the reasons why, ads for free members. Yeah. So this really, so they have the free service. Pretty sure they have their subscription somewhere here. Their plan somewhere. So they have a subscriber, and different levels of subscribers. Here it is. So free membership, 0, of course. Silver membership, gold membership, and platinum membership. So one way to monetize a free membership is ads. So you have a choice. You don't mind seeing ads if it's free? Yeah, great. Sort of like what a lot of streaming services are doing now. And like Amazon Prime, I started seeing ads. I was like, why is there ads? Well, if you want to get rid of the ads, just pay a little bit extra. Now, screw that. I'm not going to do that. I don't mind seeing one ad. Anyway, so I had a look at the presentation and went, oh, I don't mind this. I sort of can see why Life360 is a one-stop holistic experience versus competitors. There you go. I don't mind this result. It was a little bit better than I thought. And that's why the share price is up. The question I do have when it comes to Life360 is this a time to add to my trading position? I am 50% up. So let's have a look at the chart. So there's me buying when they released their results on the 1st of March. So we're talking about 5 months ago. 1st of March? That's the third. We're in August, yeah. 5 months ago, they released their results. Share price on that day rose 38.5%. Doesn't bother me. Share price rose that amount. And I understand some people get a little bit nervous when they buy on that sort of day. Well, the share price has risen 39%. I've missed the boat. I'm up 50% from that day, 5 months ago, with this position. And the share price today got to an all-time high. So, yeah, don't be nervous buying companies when the share price has risen a lot, particularly these sort of companies. I'm not talking about the biotechs or the mining exploring companies where the share price could do anything. Don't be nervous when a company releases really good financial results to buy in that company on that day, because information has changed. That's why the share price has rallied. And this is a pretty good example of that. Life360 up 50%. I think it's 50%. So what's half of 11.39? That's $5.60. We'll say 5.70. So add 5.70 to that. 17.09. Yep, share price is above 17.09, up 50%. But the question again, should I add to my position? I don't know. So that's Life360. I was going to show you a few charts really quickly. So I bought AMP. AMP was my stock of the day yesterday on the 8th of August. Share price has dropped no, it's even. Share price is up a little bit, flat today. It's in the sort of this resistance zone right now. It did get above the resistance zone for a short period, but I'm confident, not completely confident, the share price might start to creep up higher here. So that's one of the reasons I took a position in AMP. If it doesn't, it's okay. I'll just take a small loss and move on to the next potential company. Civic, this was a buy the dip situation with Civmec. So buy the dip situation, share price went on a run, pulled all the way back into this support zone, and the share price rallied today. It's gone up to $1.14. So this is an instance of me just taking advantage of a nice little dip. Now, if we see further struggles in the markets, share price of this company could go down from here. Another reason why I took a position in this one, buy the dip, also valuation. I think there is some value to Civmec. Can't say the same thing about Life360. Can't really say the same thing about AMP, but definitely Civmec. I keep wanting to say Civic. And finally, just going to have to show you Wagner's. Share price has dipped. I'm pretty sure this was maybe my stock of the day not long ago. Share price moved into this resistance zone and has pulled lower. Share price down 5.71% today. So that positive announcement they released not long ago has not really done anything. Its share price is now lower. When was that? That was, what's up now? Whoa, bit of buying has come in late. Yep, bit of buying has come in late. So according to TradingView, share price is 82.5 cents. According to ComSec, share price is 89 cents. So I may have missed the boat. Yeah, share price is low as 81 cents at 2 o'clock. So a nice little bounce for Wagner's, which hasn't come in TradingView just yet. Up to 80, what was it, 89 cents. So share price is now back into the support zone. So congratulations to those who bought on the dip today. That's all I have for today's video. If you have any more thoughts, any questions, leave those in the comment section of today's video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.